Arthur was a man of simple pleasures. He appreciated the quiet moments, the familiar routines that made up his life. Saturday strolls in the park, a comforting cup of tea in the afternoon, and the excitement of a football match on TV were the highlights of his week. These were the things that brought him joy and contentment. The world of stocks, with its complex jargon and fast-paced trading floors, felt alien to Arthur. It seemed like a world reserved for city types in sharp suits, a world far removed from his own. But one day, while patiently queuing at Greg's for his usual lunchtime treat, something caught his eye. He noticed the seemingly endless line of people, all eagerly waiting to get their hands on those famous Greg's sausage rolls. It struck him with a sudden clarity. If so many people are buying these sausage rolls day in and day out, then Greg's as a business must be thriving and successful. Suddenly, Arthur's perspective shifted. He started to see business opportunities everywhere he looked. Amazon vans constantly crisscrossing his neighborhood, iPhones glued to the hands of almost everyone he passed on the street, and those ubiquitous Costa coffee cups, a constant companion for so many. These weren't just everyday products and services. They represented thriving businesses that regular people like himself could potentially own a part of. The idea was intoxicating, a completely new way of looking at the world. He realized he didn't need to be a financial wizard or have some secret knowledge. Just be observant and pay attention to the world around him. Arthur decided to take the plunge and learn how investing actually worked, starting with the businesses and products he already knew and understood. Initially, the financial news seemed overwhelming, a confusing barrage of jargon, complex charts, and endless market updates. But then he remembered the Greg's Q, a tangible and undeniable proof of a successful and popular business. Maybe, just maybe, investing wasn't all about complicated formulas and insider secrets, but about simply seeing what's right in front of you in the everyday world. Arthur's journey into the world of investing began with a simple yet profound question. How does an ordinary person with no special training figure out if a company like Greg's is actually a good investment? He wasn't driven by the desire for quick riches or overnight success, but by a genuine interest in finding a sensible and responsible way to put his hard-earned savings to work. He realized that stock analysis at its core was a form of detective work, asking the right questions, gathering the relevant clues, and starting with the fundamental basics of a business. And so, with a mix of excitement and trepidation, Arthur took his first tentative step into the fascinating and potentially rewarding world of investing. Before Arthur could investigate, he needed to understand, what is a stock? It's not a lottery ticket or a bet. It's ownership in a real business. Buying a share means owning a piece of the company's assets and future profits. If he were buying a local pub, he'd want to know everything about it. Why treat stocks differently? The scale is bigger, but the principle is the same. Treat it like any important purchase. Professionals often forget there's a real business behind the ticker. As a regular investor, Arthur could focus on the long-term story, not quarterly noise. The key lesson: see stocks as businesses, not blips on a screen. This mindset transforms you from gambler to business analyst. It's the foundation of sensible long-term investing. Arthur's first step as a stock detective, much like any good investigator, was to truly understand Greg's. He needed to get under the skin of the business. What does Greg's do? What is their core offering? Simple. They sell affordable, tasty food to people on the go. They provide a convenient and satisfying option for busy individuals. He checked their website, learned their story, digging into their history and mission, and saw their straightforward business model. It wasn't overly complex or difficult to grasp. If you can't explain what a company does to a 10-year-old, move on. Simplicity often indicates a strong, understandable business. Arthur's edge was his everyday experience, his familiarity with the world around him. He interacted with these businesses all the time. He was a customer just like many others. Next, he asked, will people still want Greg's in 10 or 20 years? Is this a lasting need? Quick, affordable food has timeless appeal. It's a fundamental requirement for many. He compared this to trendy gadgets, fleeting fads that capture attention briefly. Here today, gone tomorrow, these lack the staying power of essential services. He wanted a reliable, steady grower, a company built for the long haul. Then he considered growth. How could Greggs expand and improve? More shops, expanding their physical presence, new menu items, catering to changing tastes and preferences, supermarket partnerships, reaching customers in new and convenient ways. Greggs wasn't standing still. They were actively seeking new opportunities. It was evolving, adapting to the market and consumer demands. Understanding a business means knowing what it does today, its current operations and strengths, and what it could become, its potential for future growth and innovation. That's the heart of smart investing, knowing what you own inside and out. With the story clear, Arthur faced the numbers. Financials seemed daunting, but he approached them like his own bank statement. Is more money coming in than going out? Is there too much debt? He checked Greggs's annual report. Sales were rising, except for a pandemic dip. Consistent sales growth was a healthy sign. Next, profit. Was Greggs making money after costs? Yes, and profits were growing too. Profitability proved the business model worked. He checked for debt. Too much could be risky. Greggs had a strong balance sheet, not weighed down by debt. A solid financial foundation meant the company could weather storms. Arthur realized good investing is about common sense questions. The numbers just tell the story in a different language. Next, Arthur asked, who else is in this game and what are their strengths? Greggs faced competition from fast food giants, supermarkets, and of course, coffee shops. The market was crowded, so what made Greggs special and stand out? Price. Greggs is famously affordable for everyone. Convenience. Shops are everywhere. People need them, readily available. Brand loyalty. Brits absolutely love Greggs. This combination created a strong moat, protecting against rivals. He looked at the industry. Demand for quick, convenient food was steadily growing. That's a tailwind. Easier to grow and thrive in a rising market. Greggs was a leader with significant scale and brand recognition. Being the big dog brought advantages, better deals, and the best locations. Sometimes, investing in a strong leader is smarter than chasing completely unknowns. Arthur saw Greggs as a dominant and resilient player in the market. Arthur knew he had to consider risks, not just rewards. First, changing tastes. What if everyone went healthy? Greggs's core menu could suffer. They'd need to adapt quickly to new trends. Second, rising costs. Ingredients, energy, wages. If costs outpace price increases, profits shrink. Inflation was a real threat. Third, management mistakes. Bad decisions or scandals could damage the brand. No company is immune to human error. Arthur checked the CEO's track record. Reassuring but not foolproof. By thinking through risks, Arthur wasn't scared off. He was prepared. If trouble came, he'd know what to watch for. Understanding risks kept him grounded. It's as important as spotting opportunities. Smart investors always play devil's advocate. Arthur had pieced together the full picture, connecting the dots between seemingly disparate pieces of information. He had diligently worked through the complexities, and now the complete puzzle was in sight. He started with a simple observation, a mere spark of curiosity, and built a logical case, brick by brick. Each piece of evidence supported the next, forming a solid foundation for his investment thesis. He understood the business, its inner workings, its strengths and its weaknesses. He delved deep into its operations, gaining a comprehensive understanding of its core functions, checked the numbers, scrutinized the financial statements, and analyzed the key performance indicators. He left no stone unturned in his quest for financial clarity, sized up the competition, assessed their strengths and weaknesses, and identified the company's competitive advantages. He understood the dynamics of the market landscape and weighed the risks, carefully considering the potential downsides and mitigating factors. He approached the investment with a clear understanding of the potential challenges. This process is the heart of stock analysis, the fundamental framework for making informed investment decisions. It's about understanding the underlying business and its potential for growth. No fancy formulas, just clear thinking, logical reasoning, and a healthy dose of skepticism. It's about applying common sense to the world of finance. The beginner's framework. Know what you own, understand the business model, and be able to explain it to someone else. If you can't, you probably shouldn't own it. Follow the money, track the cash flow, and understand how the company generates revenue. Cash is king, and a healthy cash flow is essential for long-term success. Size up the playground, assess the competitive landscape, and identify the company's position within the industry. Understand the forces at play and how they might impact the business, and ask what could go wrong. Identify the potential risks and challenges that the company might face. Consider the worst-case scenarios and how the company might respond. It won't guarantee winners, but it improves your odds, significantly increasing your chances of success in the long run. It's about playing the game with a strategic advantage. It turns speculation into informed judgment, transforming your investment decisions from mere guesses into well-reasoned conclusions. It encourages patience and a long-term view, fostering the discipline to hold onto your investments through market fluctuations and short-term volatility. That's how you find the rare 10-baggers, stocks that multiply tenfold, generating exceptional returns and transforming your portfolio. These are the investments that can truly change your financial future. Arthur's real advantage was his common sense, his ability to see through the noise and focus on the fundamentals, and willingness to do the homework, to put in the time and effort required to understand the businesses he was investing in. The market rewards those who understand what they own, those who take the time to do their research and make informed decisions. Arthur was no longer intimidated. The complexities of the stock market no longer seemed daunting. He was an investor ready to let his simple insights work for him, confident in his ability to identify and capitalize on opportunities. And it all began with a cue at Greg's and a curious mind, a testament to the power of observation and the potential for anyone to become a successful investor.